AMC again. If you haven't watched our videos from last week, we posted some videos about if it was a good time to buy GameStop and a good time to buy AMC. Well, something interesting happened just this morning, which totally blew out all of our predictions. And that interesting thing caused a surge of almost, well, over the last few days, well over 100%, but today a surge of 74% in GameStop and a surge of 78% in AMC with an additional 20% or so in after-hours trading, so really 100% surge in AMC today. So what exactly happened? What did it change? Why did it matter? Well, first off, if you haven't already, please hit that subscribe button to help support the channel so we can continue putting out amazing content like this. Second, if you haven't, feel free to go back and watch our videos on AMC and GME. So this is what's interesting about it to me. For AMC, I actually said in my video I wouldn't recommend buying at this time because there seems to be no technical pattern forming, and really your only reason to buy would be if you're hoping for a short squeeze, which it looks like we may be getting right now. So I was totally wrong on AMC. Well, I won't say that I was wrong. I was correct in my decision-making process, but some new information has come out that maybe will be changing my decision. I mean, just look at the volume here. Do you see that volume candle right there? That is absolutely absurd. 500 million shares traded back and forth today. Almost, the volume just disappears. Like, look at the last meme stock rally back here. It never got that high. We're at 4 or 5x that. Now, GameStop, I said I actually, as I was doing the video, I was like, you know what, I'm actually talking myself into starting a position, and I bought a position. I bought 100 shares of GameStop for about 13 bucks a share, and then I proceeded to sell a call, I think it was a call 16 or a call 15, and now we're sitting at $35 a share. I'm actually tomorrow likely going to buy that call back and roll it out to a longer dated call with a higher strike price somewhere in the 30s. But this is what happened. Roaring Kitty, if you're not sure who that is, his real name is Keith Gill. He was one of the original people posting on Wall Street Bets, making YouTube videos 3 years ago about GameStop and why it was an undervalued stock, why he was building a big position in it. So him, along with Michael Burry and a couple of others, I would say were the original catalysts of the GameStop short squeeze. In addition to that, of course, hedge funds were idiots by building a short position that consisted of over 100% of the float being sold short. Idiotic thing to do. They did it anyway. Keith Gill, aka Roaring Kitty, after he made, I don't know how much he made, probably upwards of, alright, so on the low end, he probably made $20 to $50 million, maybe even upwards to 100 million or a couple hundred million. He posted, said, hey guys, I'm going to go radio silent for a while, got to figure out what I want to do with my life and spend some time with the family. Totally understandable. It's been 3 years about since he posted. And then on Twitter today, all of a sudden, let me go back to it. Here it is, right? So here's his latest post, June 2021. And then here we go today in May of 2024, almost 3 years later. He posts this image. This was almost 23 hours ago. Maybe this was last night. This was last night. And the internet went wild because Roaring Kitty's back. Something's happening, right? This cryptic meme picture of a man suddenly sitting forward in his chair like, it's time, let's go, let's do this. And then all day today, he's been posting these custom-made... Oh, yeah!
I'll do it myself.
Alright, see, I'll do it myself there. And this is coming out of the adamantium chamber. This dude saying, hey, you're still here, it's over. And then Breaking Bad, where'd the Breaking Bad scene go? Breaking Bad dude saying it's not over till I say it's over. Bunch of cryptic-ish memes is basically saying like, here we go, it's round 2, right? Since that post, he's gained over 200,000 followers on Twitter. He already had a big following, but he's gained another 200,000 followers on Twitter, suggesting the meme stock crowd, not only is it still here, but it's only getting bigger. So, what do we do from here? Well, that's a really good question, right? You think, all right, GameStop is up, if you look at it from a few days ago, or like last month, right, it was trading about 11 bucks a share. Now it's at over $35 a share. That's up, 3x right there, over 200%. Do you buy in now with massive FOMO and chase, or do you wait for a dip? Honestly, if you look back at the last meme stock rally of GameStop, there wasn't really a great opportunity for a dip early on. Look at this. GameStop, we're going from $10 to $15, $16. Then it went all the way up to $30 here, and then came back down into the 20s. And then it went back up to 30, and then up to 100. And then, I mean, again, this is stock split adjusted, so this was almost $500 a share pre-stock split here. So there's a little dip right here in the middle, and then boom, 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 massive up before fading back down after a lot of halt. Likely what we're going to see in the market as this continues to happen, we'll see a lot more trading halts. I would guess we see another hedge fund blow up and become insolvent because they refuse to close their short position. And I would be shocked if we don't see a few other stocks rally as well. So GameStop was the main one that Keith Gill, aka Roaring Kitty, was in. But at that same time, AMC drew in a massive meme stock crowd. And you can see here the rally from $30 a share. This is, again, post-stock split, pre-stock split. This would have been $3 a share up to $76, but $30 to $726. And since then, just an ultimate destruction of share price all the way down here to an all-time low of $2.38. I looked back at the shares that I forgot that I had bought, and mine are at about $7 per share. So I bought I don't know, somewhere back in here. I don't really know where, but I've got shares at $7 a share, and I just hadn't sold them and I forgot about them. When I made this video, I said that I was like, I've got 100 shares, but I wouldn't necessarily recommend buying right now. Also, though, I wasn't recommending selling, since it's like, what's going to happen if you're down 99%, 99.99%? Do you really have anything left to cover? Well, now we've got something interesting here. We've got a big move up, 100% move. Look at this. It's up to 6.5 just since we've been talking. So $3 per share to 6.5 per share, over 100% in a couple of days. The trading volume is just off the charts. Look at that. 500 million shares. Let's go back to GameStop real quick, see what GameStop was at today. GameStop was at almost 200 million shares. Again, back here, GameStop actually had a significantly larger amount of shares traded, up to 750 million a day. AMC was kind of the redheaded stepchild back then, and it got high, right? There's 100 million here, and during the ultimate peak, there's about 70 million a day. But now we're talking about something that's 5-6 times greater than what happened at that point. So anybody that went short today got absolutely obliterated. Anybody who is trying to go short in the after hours is currently getting obliterated. Options premium is going to be off the charts. This is where it gets kind of spooky, right? It's if you say, how do I play this? Well, let's just look at the options premium at close today. We're going to look at literally the closest to expire option chain here. And the most that you can go out of the money right now is $8. So this is saying, if you want these calls for $8, 45 bucks, and they expire in 4 days. You have 4 days for AMC to gain another, roughly 35%, to move from $6.50 to $8 per share. And actually, because when the market closed, it closed here at 5.50. So these at open tomorrow will probably be worth $60, $70 a share. Excuse me, a contract. Now, if we want to buy ourselves any type of time, again, this last short squeeze, it happened fast and furious. The whole thing was over in about a month. So let's say, okay, sometime in the next 40 days, it'll hit its peak of whatever, 60 bucks a share, $600 a share. Let's go 40 days out. Buy ourselves some time. Well, you're looking at, if you want to go as far out of the money as you can, literally, price would have to triple again, more than triple for this to be in the money. 40 bucks for a call 20. That's pretty dang wild. Now, if I was an AMC shareholder right now, what I would probably do with my position, and this is what I'm likely going to do, and this is not financial advice, do your own research, do your own thing, is I would start selling out of the money calls on my position every single week, or every single time I thought there was a big surge before pullback. So tomorrow, or in the next few days, let's say AMC climbs up to somewhere between $15 and $20 a share. I'm going to be looking at selling call 20, call 25s, because when this updates tomorrow, there's going to be a whole new set of option chains way further out of the money that you can decide to purchase if you want. The other thing I would consider doing is something like this, where these 40-day out ones, I don't want to go this far out of the money, right? That's kind of wild. But what I might do is I might buy this right here, $7, and then what I might also do is sell this right here, the $8 contract. And what this does for me is it massively reduces the buy-in, right? This is going to cost me 13 bucks, and it has a max profit of $87. That's a very, in my opinion, that's an excellent return, 800% return if AMC continues to move up, and I've just mitigated my downside significantly, right? Whereas the other option, of course, is I could just buy this outright, and then say AMC goes to, let's see, by expiration to get this would have to be trading about $16, $17 a share, and then that would also have gained approximately the same percentage-wise, right? But in this case, right, let's just say I buy these options and sell these ones for 13. As long as AMC is trading at above $8 per share by expiration, or really any time before then, I've made a full profit there. I don't have to bank on it going up to $15, $16, $17 a share. It can just go up to 10. It goes up to $10 a share, and I'm golden. So this is a play that I'll be looking at tomorrow to see if I can find a good fill for something like this. And I think it's a very, very safe way to play the position. The other thing I would consider doing tomorrow, and I don't know for sure if I'll be doing this, but I'm going to consider it, is I would be looking at selling some out-of-the-money puts for, say, $5, these $5 puts, right? This has a lot of juiced premium in it, not a lot of time left to expiration, and I would be shocked if this rally does not sustain itself for more than 5 days. As much as people want to say that, this is crazy, it's hopium, the fact that Roaring Kitty came back, made a few posts, and AMC's up 100%, GameStop's up 100%, it shows the meme stock community still there. Also, in my opinion, it shows that there are likely institutional investors, hedge funds primarily, who are betting with the retail surge this time instead of betting against it. I would be very surprised. I wouldn't be very surprised if over the next couple of weeks some hedge funds come out and disclose positions, long positions in AMC and in GameStop, banking on the fact that the retail excitement plus their positions plus the fact that both of these were pretty down and are going to be blasting up. Like imagine, right, anybody that shorted AMC back here at $4 a share, they were at a nice healthy position, they just got blown up, right? Let's just go back a little bit further, not that far. Anybody that shorted AMC here at $8 is looking at this going, oh yikes, what's going to happen next? And then if by chance AMC makes it up to $40 a share again, that is going to be, that's going to be wild. But we'll be taking this one day at a time. That's a quick update on AMC and GameStop, though. Again, you got to play at your own risk level. I've disclosed my positions. You already know what I hold. I hold 100 shares of GameStop that I've sold a covered call on. I hold 100 shares of AMC at about I think it was 7.18 per share. So I'm a little bit down on those still. But my play with AMC is I'm going to be selling covered calls on my shares. And I may look at doing some sort of call spread position to capitalize on the fact that this meme rally may have just begun. But I'm going to look at mitigating my risk, right? I'm not going to just buy naked call. Well, I'm not going to just buy calls outright like this. I'll likely do some sort of spread like this, or I may consider something like this, right? This actually doesn't increase my cost all that much. I went from $12 to $18, but I've just opened up a lot more upside potential here, where now my maximum gain for this contract is, what would it be, $182, as opposed to this being a maximum gain of roughly $87. So that's it for today. Thanks for tuning in to Your Average Investor. We'll keep you updated as this continues, and our thoughts. I'd love to hear your thoughts in the comments below.